The Ensemble podcast is intended for professional financial advisors. All discussion is limited to publicly available information and should not be interpreted as legal, professional, or financial advice. Ensemble does not hold an AFS license nor provide any financial services. Before making investment decisions, you should obtain financial advice from a qualified financial advisor.
Hello, my name's James Wrigley. I'm a financial advisor and one of the principals of Melbourne-based financial planning firm First Financial. I've been a long-term listener and contributor to the Ensemble group and podcast, picking up some amazing nuggets of gold over the years. And through this podcast and the people that I'm able to speak to and interview, hopefully I can continue to deliver some of those nuggets of gold to you.
This episode is brought to you by Capital Group, one of the oldest and largest asset management companies in the world, managing multi-asset, equity and fixed income investment strategies for different types of investors. Since 1931, Capital Group has been singularly focused on delivering superior, consistent results for long-term investors using high-conviction portfolios, rigorous research and individual accountability.
Hello, welcome back to another episode. I'm James Wrigley. I'm joined by Justin Lucas today. Justin from Koda. Thank you for joining me.
Thanks, James. Happy to be here.
Well, thank you for accepting my my invitation to join. We've known each other for a long while, from many years back, at a bit of a distance these days. But good to chat with you and catch up. And I thought might be interesting for other people to have a listen about what you're up to and so forth. So maybe Koda Capital, maybe give us a bit of, a few minutes on what Koda is. We'll circle back to it, what you're up to now. But tell us about Koda and your team and let's go from there.
Yeah, sure. So Koda is a business that was founded about 7 or 8 years ago. A few founders, but principally by Paul Heath, who many years ago was my boss at Goldman Sachs JB Weir, and Steve Tucker, who was the boss of MLC for some years. So they stepped out of their, very large bureaucratic organisations. Were looking to do something new, and sort of had this idea that they could start a firm that had similarities with the firms that they had been running in the past, but sort of distinguished itself for being entirely independent, not being aligned to a bank, not being aligned to a fund manager, and they thought there was a market in the high net worth and not-for-profit space for that type of thing. And there weren't a lot of competitors at that time sort of doing that in the high net worth space. It's sort of since changed where there's more doing it now, but that was sort of the idea. And it's grown really strongly. And I joined the firm with Alison Matthews, my business partner, coming up to 5 years ago. And yeah, we're seeing huge growth. So we've started with absolutely nothing and a couple of employees, and now we've got sort of 120 employees, offices in Brisbane, Sydney, Melbourne, Perth, and managing about $11 billion. So I think everyone's been happy with the sort of growth that we've had. It hasn't sort of all been smooth sailing with getting new businesses going and challenges, etc. But in the main, it's going really well. 120
people. That's a big business. I'd had a sense of there was a few people there, but I didn't realize it was quite that big. That's incredible.
Yeah, we made an acquisition last year where we bought a business in Perth that was called Redwood Alliance. Now Koda Perth, and that added some employees. We're really excited about that. Actually, we think Perth's a great market. Paul and Steve are actually originally Perth people, and we felt to do that market justice and to serve it properly, we really needed to have boots on the ground. It's a long way away and, a slightly different market to other ones. And so that expanded the team quite a bit when we did that.
Yeah. Maybe let's go back a bit in your journey in financial advice. As we were talking before we pressed record, you have worked for some of the bigger groups, these groups that are targeting high net worths and not-for-profits and the like, as you touched on. I suspect that's probably a little bit different to where most of the people in the Ensemble community might sit. I think the Ensemble community is often a lot of small businesses, individual advisors and so forth. So it seems like a bit of a different world, I would guess, from where a lot of them sit. But talk us through your employment journey to...
Yeah, look, I mean, it is and it isn't. There's certainly big sort of commonalities between what all advisors do, I think. But it is targeting a different segment, that's for sure. My career, as you know, sort of started in a WHK Supermaster and a sort of a focus that you would understand. I had a great time there, learned a lot. Great group of people. I used to work with a lot of them.
Yeah.
And then, really the only reason I left is I wanted to travel, and I backpacked around Africa for a little while, and then wound up in London. And I really didn't have sort of much expectation of what I would do in London. I didn't want to pull beers, but I wasn't sort of sure how my financial planning and paraplanning background would translate to London. It's obviously a different market, and the laws are different. So I didn't know, but I was really fortunate. It was sort of a lucky situation where, for me, where UBS sort of had a lot of things going on in 2008, and they had a lot of people leave the organisation, and they were really keen to get people to come in. And I was lucky enough. I think there were 12 people that joined pretty much on the same day that I did, and like 6 or 7 of them were Australians. So it was a funny, great fun sort of atmosphere, and it was sort of eye-opening to me to work in that environment. It was sort of, stereotypical private banking in Europe and London. We were right in the heart of Mayfair and in Green Park. Incredible sort of wealth, very international. They had sort of 2 floors, and one of the floors was international desks, and a Chinese desk and a Russian desk, and et cetera, et cetera. So it was really eye-opening for me. It was certainly a really steep learning curve, because it was a market I didn't know. Having an Australian accent, people asked me to speak slower, and it was just, as you'd appreciate, just an incredible time in markets, because it was 2008. I think I got there in May 2008, and it was, everything seemed like it was going pretty well, and then, obviously markets generally really suffered in the September, October.
Yeah.
And it kind of felt like we were really in the heart of things as well, because that building that we're in, it was sort of, it got, the press started calling it hedge fund hotel. It had GLG Capital, which is a big London-based hedge fund, but it also had AIG Structured Products, which was the unit, really amazing. It was just one floor, but they had lost like billions and billions of dollars on credit defaults. So we used to have, the press would wait outside our offices and want an interview. Obviously we had nothing to do with it, or no interest. But yeah, so it was an amazing time. And yeah, certainly learnt a lot. Came back to Australia, briefly worked at, I think at the time it was Goldman Sachs JBB. I think NAB had just purchased that business, so they were going through that transition.
Yep.
And then I landed a job at CBA in the private bank, and that's where I spent the bulk of my career, but a good amount of time, where I started working with Alison Matthews, who still works with me today. And yeah, we sort of started working on, they obviously CBA segment their clients, and we were looking after the high net worth clients there, and continue to do that at Koda today.
Yeah. So was the Commonwealth Bank private bank, with the high net worth, was that anything like the people you were dealing with in London, or completely different?
There were certainly similarities. There were similarities. I mean, London sort of had these sort of quirks of a lot of offshore business. So you had a huge amount of clients who were managed out of Jersey and Guernsey, and we had sort of dealings with Swiss-based clients and clients that just had numbers instead of names. So funny things. There were certainly nuances and differences in the UK market. I think the high net worth market in the UK is also fundamentally different to Australia. I think in the main, Australia, it's a newer country. There are lots and lots of wealthy people, but most of them have done it themselves. In the UK, there's a lot of lords and sirs, and I remember doing a KYC of source of wealth, and the person said from the 1600s. Like it was. So yeah, that was sort of a big difference, and certainly there's this formality in the UK that's different in Australia. Sort of the way that I remember getting in trouble saying calling a client mate. My boss, yes, I don't call him mate. So yeah, I think Australia a lot more relaxed.
Yeah, and so you spent a few years at Commonwealth. So Commonwealth got out of financial advice. Did you leave before they got out of financial advice?
Yeah, they were sort of in the process of doing that. That they, as I currently understand, they're not in retail advice anymore. So I mean, obviously CBA had well documented sort of issues in advice that you'd be aware of, but in saying that, in the private bank we had nothing but really good experiences. It was quite distinct from a lot of those things that were happening in retail, and it enabled us to build a great book of clients, and for me personally to start working with Alison Matthews, who has sort of a more retail financial planning or financial planning strategic background and focus, and that's kind of how we work together. I'm sort of more investment focused, and she's more on the sort of strategy and financial planning side of things.
Yep. And so you refer to Alison as a business partner. I'm interested in, like, what does the setup actually look like for you? So, it's like, here there's different people own, different proportions of the business, and then, people are employees and so forth.
Yep.
What's the structure like?
Yeah, so Alison and I are equity partners in Koda. There's 40 odd equity partners in Koda. So we're sort of partners in that sense. But also Alison and I, which is a little bit unique to Koda, there's a few teams like us, but generally it's single advisors looking after clients, whereas with Alison and I, we have sort of taken that team-based approach to our clients at Koda. That's what our clients were used to at CBA, where you've got two advisors looking after you. And we continue to do that at Koda. So the way it sort of works in practice is that we, generally speaking, will both go to meetings together with clients. If there is sort of a modelling, financial planning, super contribution advice, et cetera, that's Alison to run with that. She's often more of the person that deals with accountants and estate planning, et cetera, to do that. But the idea is that we always share clients from a revenue perspective. It's just a 50-50 split, so it's nice and clean.
Yep. And then underneath you guys, like, what do you have a team of people that work directly with you? Is it some pool structure? Like, what does that look like?
Yeah, it's reasonably lean. I was just saying before, we were in the process of hiring an associate advisor. We sort of reached the point in which we do really need an extra resource. But really, Alison and I are pretty hands-on with what we do, and doing advice, etc. And we have an amazing sort of administrative assistant who helps us. But we certainly are reaching a point where we want and need extra support. But it is a different sort of business to sort of a standard financial planning business, where there's can be lots and lots of clients. We have 60 clients.
Yep.
And 60 high net worth clients and a couple of not-for-profit clients. So, you're not talking about hundreds and hundreds of clients to service.
Yeah. And we were talking before we pressed record about, and a lot of businesses, they're not trying to be the advisor, the financial planner, whatever you want to call it. They're not trying to be the advisor for everyone. They're pretty narrow in who they're wanting to work with.
Yep.
So you talk about kind of high net worth and not-for-profits, but is there anything else that kind of identifies, these are clients that we really like to work with? Yeah.
So, I mean, it's talk to sort of the average type of client. We steer away from having sort of hard minimums and saying we'll only look after a client with X dollars, etc. We don't think that's always appropriate. And, we've got some fantastic clients that actually started relatively small, but, you could see great potential in what they were doing.
Yeah.
But the average client, if you sort of work backwards, is about $5 million of invested money with Koda. Some smaller, some larger. We do have a retail and a wholesale license. We're able to provide retail advice, but it's fair to say that the bulk of our attention goes to our wholesale offering. And from an investment point of view, there's a lot of investments that are only wholesale only. So certainly, as a new client walking in the door, our preference would be for them to meet that wholesale definition first of all. But beyond that, it's really sort of a need and a desire for advice. I mean, you can meet someone with $10 million, but they love doing it themselves, or they have very strong views and don't really, want your advice. And they meet your objective on a sort of financial metric, but they're not actually in need or don't think they're in need of your advice. So I guess that's the two elements that they generally have a few $1 million to invest. Most of the time wholesale in terms of the classification, but most importantly, have a need for advice.
Yeah, and so I personally don't have a whole lot of experience with the differences between the advice, the documentation, compliance, whatever you want to call it, that's required for a wholesale client versus a retail client. You know, we work with clients that would certainly satisfy the definition of wholesale, but as a business, we've made a decision to just treat everyone as retail, and so potentially that's overkill on certain things. But can you talk us through what the differences are in terms of what's required of you if someone meets a wholesale definition versus they don't?
We've always sort of taken the approach that even though a client may meet a wholesale definition, that we don't want to sort of not do components of the retail process that are very valuable. So we still do fact finds, we still do risk profiling, we still produce wholesale advice documents. They're not necessarily as long and cumbersome as statements of advice, but we do believe that there is actually a lot of value in those types of documents. So it's just delivered in a different sort of way. Certainly our focus on doing wholesale advice isn't driven by like a desire to cut down on compliance. It's really because we know that there's a pool of investments that we couldn't otherwise access if they weren't classified as wholesale. So that's sort of the main reason. That's the main distinction. It's not so much about the advice looking dramatically different. It's that there's things that we can include in portfolios that we wouldn't otherwise be. So more of a focus generally on things like private equity, private debt, private infrastructure, various hedge fund strategies that we wouldn't otherwise be able to get into client portfolios.
And where do those investment opportunities come from? Is that you sourcing them? Is it Koda sourcing them? Like how do the doors open to these opportunities? Yeah,
so we do have a central research team based out of Sydney, and on a funds perspective that's led by a guy, Jason Coggins. And so he's sort of tasked with finding these opportunities. One of the sort of distinctions of Koda is that we have a sort of real willingness to find offshore opportunities. And I don't mean, a manager based in America that brings a fund to Australia, but actually going offshore and speaking to family offices and other Koda-like businesses in New York and Switzerland, etc., and finding out what they're investing in. And from time to time, we will bring, if we think it's really attractive, we'll bring that offering back to Australia. But, those types of things are almost always wholesale in nature and not retail, because they're happy for us to invest in their structure, but they're not wanting to go through the whole process of getting PDS, etc., and going through that formality of the Australian process. So for us, it's important to have that wholesale classification. There's also within Australia, there's a lot of in the private debt space, a lot of providers that focus more on the wholesale rather than the retail. It is, and I think it is changing. I think retail, it really shouldn't be chopped out of some of these important asset classes, and it's starting to. I think fund managers are starting to focus much more on that. So it's making its way through. But
and do you get clients coming to you because they want to is that one of the big draw cards of clients coming to you? Is that they have the opportunity to invest in these things, or is it's just part of the process where you're talking about these different opportunities?
Yeah, I think it's more part of the process. I mean, most clients that come to us are probably similar in clients that would come to you. They come to us because they're friends of an existing client or family of an existing client, or they're connected to corporate advisory or accountants that we work with. Look, investments we think is a differentiator. It does look a little bit different. Look, maybe it does occasionally attract people just for that reason, but generally speaking, it's because accountants and clients have built up a trust and trust in us to refer to us generally.
Yep. Now, I saw on your LinkedIn in the last week or two, you'd actually been on an overseas trip. Did it look like a research type trip?
It was more of a
was it a holiday or a
few people asked me if it was tax deductible. It was much more of a holiday. My in-laws are in Bangkok, so it was really just a comment. And look, he sort of had I put it on LinkedIn as a comment about sort of my insights into Asia. We do invest into Asian equities, it's an area of the market, and including, interestingly, Vietnam is an area of the market that we do think is interesting. So it had some relevance to legitimate work, but it wasn't actually a legitimate.
Do you get the opportunity to go to, I don't know, talk to some of these family offices overseas or whatever? Do you as an individual advisor ever get along to any of those things?
Yeah, look, I personally haven't, but I know that there's quite a lot of partners that have, and certainly Jason and the research team, regularly do it. And they're off to Europe in the next week or so.
Yep.
Yeah, and I would like to do that. It'd be great to drop into some of the people that we have, and we've got people all over the world in terms of funds. We've got funds based out of Munich in Germany, and Sweden, in London, so New York, California. So there's plenty of potential travel/business trips that we could.
Someone else gets them at the moment, though.
Yeah, exactly.
So you spoke about looking to hire an associate soon, and whatever means you do for that. But what are your plans for the team going forward? Like, what do you you're however many years you're in 6 or 7 years or so in? What are your plans?
Yeah, for that person, we really, I know this is sort of an obvious thing to say, but we really want whoever comes on board to be we call them a long-term Codan.
Yeah.
And really to be aligned to the organisation long-term and to sort of grow with it. Ideally we want this person to be an advisor partner. That's the ultimate objective. We're very, and you probably think about this as well. When you become an equity partner in a business, you kind of think more about the long-term health of the business and the future for the business. And undoubtedly the best thing you can do is bring great young people in that learn and grow and eventually become, significant business writers themselves. It's the only way. We can't keep working forever. And so you've got to do it. So yeah, we think it's a great role. I mean, it's interesting. We do have some good candidates that have applied, but also just anecdotally, it seems like it's a really tight labour market. That good people with experience are really in hot demand.
Yeah, that's it. And we find the same here. If we're trying to hire into our client services team, for some reason we've managed to find some amazing new people into our client services team just in the last couple of months. But we've had other periods of time where we've been trying to hire, and for different reasons it hasn't worked out. Yeah, I think that's just the unemployment rate in the country. Get out to the economy and inflation and all the rest of it. But that's probably just a reflection of the unemployment rate at the moment, that it's tough to find anyone anywhere. And
yeah, it's seemingly across so many industries. Talking to clients, it's amazing that this sort of and globally it seems to be a dynamic at play. So it's very strange, but I think it's a great opportunity. So I think we'll find someone good, but it's a really important hire for us. We don't want to do it again. We want to invest the time and get the right person, and hopefully that person's with us for 20 years.
Yeah. Are you doing anything interesting in terms of how you manage like the admin side of a business, technology, how you interact with the clients? Is you doing anything interesting in that space?
Yeah, I mean, you might have seen on a LinkedIn post from a few weeks ago, I've become completely obsessed with ChatGPT and AI. I think we're sort of in the very early stages of properly integrating this in a very helpful way into our processes. But I honestly think it'll get there. One of the challenges with ChatGPT is sort of the privacy side of things and getting, confidential data into AI. But I think, Microsoft will solve that in time. So there's sort of little things that we do in the AI space, and do use ChatGPT for, things like helping with spreadsheets and PowerPoints and.
Yeah, what are you doing? What are you prompting ChatGPT with? What are you trying to get out of?
Yeah, so I use it for things like. We're working on sort of manual spreadsheets as an example. I just love the way in which you can say, I want my spreadsheet to do this. Can you tell me how to do it? And then it comes back and maybe it's not right, and you can talk to it and then refine it and get something that you probably could have Googled and figured out, but it would have been a lot more time consuming. Yeah. I've had to play around with VBA, Visual Basics, which is sort of the programming that sits behind Excel, to automate some things as well. And again, like ChatGPT does an amazing job at doing that. So I think it does all those sort of things well. I think in the future, someone's going to work out a way of integrating AI into the production of SOAs and advice, etc. And it'll make everyone's life a lot easier. But I'm just watching this space at the moment.
Yeah, I had to play around with it a while ago now and just put some prompts in there to say, no, I need to do a statement of advice. I want to move from this superannuation fund to this superannuation fund, put a cost comparison table in there. And it, took me a bit of prompting backwards and forwards, but within the space of 10 minutes or so, I probably had the outline of what we would call in our SOA presentations one of the tags. So our power planners, there's a list of different strategies that they're putting in the tags, and it spat it out. It's like, this is crazy, and soon enough.
Yeah.
But to your point about the personal information, you need to obviously be really careful about what you're feeding the machine.
Yeah.
For the time being anyway. Someone will solve that problem.
Yeah, exactly. I think someone will have an app that sort of builds off OpenAI but keeps all your data secure without you loading it on.
Yeah. The bit that we're trying to work through at the moment is the provision of statements of advice in video format. I know there's a lot of other advisors that are already doing it where we're trying to build it because there's a few advisors here. We're trying to build it that's rather than just one person, that it's a bit scalable. And then there's the whole recording the meetings and the transcribing, and there's apps and things. But in my mind, it'd be great to get the transcription from this meeting. You obviously couldn't do it, but put the whole thing in ChatGPT and say, hey, make my file note, tell me what my actions are. And off you go. And I'm sure it could turn it around really quickly, but I can't go putting an hour video recording into ChatGPT just yet.
Yeah.
So,
well, apparently, as I'm obsessed with this stuff, there's something that's very close to coming out called Microsoft Copilot. And it's basically going to use sort of ChatGPT functionality, but sit inside the Microsoft suite of applications. And so Microsoft Teams, in theory, would, you'd be able to take all that script, automatically upload it, say, summarize it. I've had to play at it for internal things that aren't sort of confidential, just to, summarize what so-and-so was talking about. And it does an amazing job. Even just like, I don't know, and sometimes people are talking in sort of really complex ways and just like simplify it, and it simplifies it. So it's pretty incredible. And for, I wonder about what the world of education is going to look like and how that's going to affect our kids and how they're going to do what, I just can't see them doing education the same way that we did it.
Nah. Well, someone messaged me on Instagram saying, hey, they're a financial advisor. Did I think ChatGPT was going to take over the role of a financial advisor? What do you think?
No, I don't think so. I think fundamentally there's sort of a need and a desire for a lot of people to have that sort of human interaction and that human trust. I think at the edges, technology was always going to replace parts of financial advice, and we've seen robo, etc., have some success, but sort of still limited. So I'm certainly hopeful that it doesn't replace us, but I really doubt that it would. But I do think that I heard a quote somewhere that ChatGPT won't take your job. Someone who knows how to use ChatGPT will take your job, and I think that's true. I think there's going to be I think the fact that Microsoft called it Copilot, I think that's what it's going to be. It's kind of going to be like a virtual assistant that we're going to need to learn how to harness its power, but I doubt it'll completely replace it. And the other thing is that, and maybe this is a limitation that they can get over, but I don't know if you've had much of a play with it where you ask it something and it doesn't know the answer, and the whole concept of the AI is that it's basically guessing the next word and guessing what's coming. And so it can very confidently say things that aren't right, that are just completely wrong. So, you'd hate to be providing completely unfactual, incorrect advice to clients without a human overlay. We definitely need a human going. That doesn't make sense.
Yeah. I think it's like all of these advancements. It certainly there are elements where it will replace someone's job, but it's also going to create others. And the idea of, you're the person that knows how to use ChatGPT so that we can get the best outcome for our business.
Yeah,
that job didn't exist yesterday, but maybe tomorrow it does. So some will go, some will stay. But yeah, I'm with you. I think the role of having that conversation and guiding the client and those kind of things, there's a need for a human element, at least for the time being, in all of that. I don't think that's going anywhere anytime soon. Maybe other elements of the process can be sped up and made a whole lot more efficient and potentially cheaper for clients and all the rest of it because of his advancement.
Yeah, and I think that it's a different analogy, but the calculator didn't didn't destroy the maths teacher or the engineer. Like, it became a tool. You know, I do think a lot of these things, and as you say, that we're at really low levels of unemployment, and yet we've had all these technological advancements that have displaced people. And the reality is that it's opened up opportunities in other areas. So I take a half glass full approach, that we're not all being replaced by machines, but I think we do, you know, where it's incumbent on us to really be across it. And I also think it's exciting, and I think a lot of the things that it's replacing and automating weren't necessarily the things we love doing anyway.
Yeah. Anything else that's exciting in?
No, not in a technology sense. So not really.
Or other?
I said that's for me, that's the most exciting area. I know that I've listened to other podcasts of you of people that's put up interesting apps, but no, none that really scream out to me.
Yeah. Okay. All right. Well, Justin, thank you for joining me today. Good to chat. Good to catch up. Hopefully, some people listening along got some value from that.
Very good.
Good to see you.
Well, yeah, very happy to be on, and I look forward to catching up separately.
Thanks.
Thanks, James.
See ya.